A blowout trade deficit rattles GDP estimates, oil jumps on Iran fears, and earnings shakeups send Carvana down while Quanta services surges. Welcome back to Navalier Market Buzz. December trade deficit came in much higher than expected. Why did that surprise economists and force them to cut fourth quarter GDP estimates?
Well, what happened is the Commerce Department announced that imports surged 3.6% in December, but exports declined 1.7%. And the deficit for December was over $70 billion, and economists were expecting a little over $55 billion. So this was a big surprise, and it's causing economists to cut their fourth quarter GDP estimates. As an example, the Atlanta Fed lowered their estimate from 3.6 to 3%. So all that stunning GDP growth that I was predicting, Howard Lutnick was predicting, will not be happening until this year. In the fourth quarter, it's going to be held back. And also the government shutdown might hold it back too.
But now, how does a bigger trade deficit actually impact GDP?
Well, it's a huge component. The only way you can boost GDP is, one, through productivity enhancements, as Ed Yardeni pointed out. Two, by shrinking the trade deficit, which was happening, but it has backed up in the last 2 months, November, December. And then, of course, consumer spending. So those are the keys to have a robust, healthy economy. And it looks like, to be candid with you, most of our economic growth is going to be coming from productivity gains thanks to AI. And in fact, we see that in the earnings environment. Earnings are up 12.1% so far this quarter. Sales are up about 9%. This is the 10th quarter in a row that earnings have outpaced sales. And that's part of the productivity enhancement and GDP growth as well. So that's what we got to do. Now, Kevin Warsh, our new Fed chairman, he has to be confirmed by the Senate, is apparently expecting huge productivity gains from AI. And he's going to be using that as one of the reasons to cut rates, because those productivity gains aren't normally inflationary at all.
Brent crude oil jumped about $70 per barrel on fears that the U.S. could strike Iran. How serious is this risk, and what will happen if tensions escalate?
Well, it is a real risk. I mean, obviously, we've assembled the most military firepower since the Gulf War. Obviously, President Trump is trying to intimidate Iran. Iran did tentatively agree to stop their nuclear enrichment for the next 3 years, but that was nowhere near enough. Basically, the U.S. is demanding that Iran stop all nuclear enrichment, okay? And they obviously would like a regime change, but that's compound complex. So we'll see how Iran responds. They're famous for dragging things out, kicking the can down the road. They partially closed the Strait of Hormuz. You're showing a chart of the energy traffic that goes through the Strait of Hormuz. And furthermore, it's rumored they might be launching some missiles to show how strong they are. So whatever President Trump does, it has to be fast, it has to be furious, it has to be decisive. And we do not want American hostages in Iran, especially from like pilots and things. So it's going to be interesting. You know, we're trying to make the world a better, safer place. And if Iran doesn't play ball, then President Trump will do what he has to do. But it has to be decisive. Now, normally this kind of military action does not hurt the stock market, okay, as long as it's decisive, short-lived, and it won't be a surprise. Now, when will this happen? To President Trump. And J.D. Vance is involved in negotiations, and we'll see what happens. But it's definitely going to keep crude oil prices artificially high.
Why did Carvana fall even after reporting huge revenue and earnings beats?
That's a great question. And I think it's confusing to a lot of people. So let's just explain what happened. Carvana's revenue surged 58% compared to a year ago. Their operating earnings rose 653% compared to a year ago. Now, according to Zacks, okay, they posted a 7.3% revenue surprise and a 274% earnings surprise. So why did it sell off? Well, some analysts expected slightly higher operating earnings, but this is a company whose earnings just went up 274%. I mean, I think it was a gross overreaction. This is shows you what happens, how they just read the headlines and don't read the details. So I think the sell-off in Carvana was completely unfounded. I think it is a great buy here, and I would back up the truck and buy a lot more. It's a great near-term buy.
So then why did Quanta Services soar after what looked like a more modest beat?
Yeah, their sales for Quanta Services rose 19.7%, and earnings rose 7.5%. But they beat analyst sales estimates by 7.8% and their earnings estimates by 5.4%. But their order backlog rose and their guidance was positive. Quanta Services is in a very sexy place for investors, which is building out data centers. So it was just the latest evidence that the data center demand remains strong, business remains robust, and the stock was rewarded for that. So it's always about the surprise and the guidance. And obviously we own Quanta Services PWR, so we're very, very happy with the rally.
Now on to some bizarre news. Why is the Bank of England preparing a study on the economic impact of aliens being real? What does this even mean for markets?
Well, that is the bizarre news, and that's actually old news. But the reason it popped up again is President Obama was talking about aliens, and he said they're not at Area 51 in Nevada. And then President Trump said he is not supposed to disclose classified secrets, because, the ex-presidents do get classified reports. And Laura Trump, his daughter-in-law, was also talking about how President Trump has a speech to give on the revealing that there is alien or extraterrestrial life. Now, obviously, these were just things that went wild in the media, okay? Obviously, there's a Spielberg movie coming out in June. Implies this is happening. But, President Trump is a master at dominating the news media. And if and when he discloses this, he will disclose it when he thinks it benefits him. But right now, it came up because he wanted to humiliate President Obama and accuse him of leaking classified intelligence. So now the Bank of England thing is even more bizarre because apparently somebody in the U.S. told the Bank of England we're going to be announcing this stuff. We'll see. I'm fortunate to know Christopher Mellon, who is the expert on all this. He's the one that released the TikTok video to the New York Times. He's an defense official under Bill Clinton, as well as George Bush 41. I haven't talked to Chris Mellon about this, but let's just hope when they disclose everything and all comes out. He has been pushing for disclosure, and Chris Mellon is all over that disclosure movie that came out a while ago. So I don't think we should worry about it. I mean, if the aliens have been here, they've been here for a long time, so life goes on.
Now let's move into some earning announcements. Let's start out with the consumer. Are they still spending? What do you see with Domino's Pizza? Is it value driving traffic?
That's a good question. Sales are supposed to be up 5.2%. That's not bad for a pizza company. Earnings supposed to be up 10%. That's excellent. It means their margins are expanding. We do have a pretty steady analyst estimates in the last 3 months. Domino's did surprise in the third quarter 3.2%. So let's hope they surprise. I like the margin expansion. Consumers are going to be getting more money in their pocket because of the tax cuts, but this is the fourth quarter. So we'll see. If they were spent in the fourth quarter, I think they'll be spent a lot more in the first quarter.
Now, how did Home Depot perform with housing still under pressure?
Well, that's a great question. And contractors do go to Home Depot quite a bit. So Home Depot is much more sensitive to contractor volume than Lowe's. But their sales are supposed to be down 4.2%. Their earnings are supposed to be down 16.4%. So that just shows you the weakness in the construction housing market. And the analysts have trimmed their estimates a bit in the last 90 days. And unfortunately, Home Depot has missed for 4 straight quarters. So that's unfortunate. This is a great company. It's just out of sync right now. Hopefully we'll get some green shoots, but I have extremely low expectations at this time.
Is Lowe's telling the same story?
Well, Lowe's is a little different. And, what's interesting about both Lowe's and Home Depot, they hire a lot in the spring for garden sales and things. And obviously, as you know, it's been snowing in a lot of places. I think you're in the snow now. And, you got to have that stuff melt, plant the petunias and all. So Lowe's has been doing better. They have a direct-to-consumer model. Their sales are supposed to be up 9.7%. Their earnings, though, are supposed to be only up 0.7%. The analyst community has trimmed their estimates slightly, but nowhere near as aggressive as Home Depot. And they have surprised the last 4 quarters. So I'm expecting Lowe's to surprise, but none of these stocks are strong enough for my portfolios at this time.
What does TJX company say about bargain hunting shoppers?
Well, as you know, everybody likes a bargain, especially the ladies that dominate the sales at TJX. Their sales are supposed to be up 6.3%. Their earnings are supposed to be up 12.5%, so that's excellent. No analyst cuts at all. They've been holding steady, and they did have a 5% surprise last quarter, and they have surprised for the last 4 quarters. So because of the margin expansion, earnings exceeding sales growth, I would expect a nice surprise from TJX. But again, not strong enough for me to buy it.
And how is Keurig Dr. Pepper holding up in this environment?
This is kind of an interesting company because, you're mixing coffee with soft drinks and all, but sales are supposed to be up 6.9%. Earnings are supposed to be up only 1.5%. So that means the margins are under compression a bit. Analysts have not changed their estimates, and surprises have been minuscule in the recent quarter. So they'll probably have another minuscule surprise. I think their guidance will be important where the consumer is. Obviously, coffee prices are very high, and consumers are looking for caffeinated alternatives.
Let's shift to tech. Is NVIDIA still the AI gold standard?
Oh, yeah. I mean, it's just an amazing company. So let's just cut to the chase and remind everybody why NVIDIA is so strong. Their sales, are supposed to be up 67%. Their earnings are supposed to be up 71.5%. Again, when earnings grow fast in sales, margins are expanding. NVIDIA is the highest operating margin company I recommend, pushing almost 70% operating margins after taxes. The analyst committee has been really cautious on this company, but they have revised their estimates just a teeny bit higher recently, and their surprises are excellent, and it's always about the guidance. The reason we're expecting a blowout for NVIDIA, and this is our largest holding by far, is Supermicro's sales were up 123%. Vertiv Holdings also had incredible results. It's VRT. And finally, the company that makes the NVIDIA Blackwell and Vera Rubin chips, Taiwan Semi, announced their January sales growth was up 36.8%, but stronger than expected. Earlier guided 30%. So if all their customers are reporting stunning sales, I think NVIDIA will have even stronger sales. Now, with that said, this is a $5 trillion company. It's the bigger you get, the harder it is to go up. There's a lot of cover call option writing done on this stock. Sometimes the tail wags the dog, but I'm looking forward to NVIDIA's results, and I expect them to be spectacular. And I hope it does lift this behemoth company. And just so everybody remembers, NVIDIA is bigger than the entire British stock market. It is bigger than the French, German, and Italian stock markets combined. It's estimated that it might account for up to 14% of our GDP growth in America. So an incredible company.
What are you watching in Salesforce? Growth or margin story?
Both. I want growth and I want expanding margins. And this company had a huge third quarter beat. So hopefully they can follow through in the fourth quarter. So sales are supposed to be up 11.9%. Earnings is supposed to be up 9.7%, so it means a bit of margin contraction. But analysts have revised their estimates slightly higher. And again, they had a big beat last quarter, 13.6%. So I'm expecting great results from Salesforce. We'll find out soon.
And where does Dell Technologies fit into the AI hardware build-out?
Well, Dell obviously builds the rack systems that go in the data centers. They're not as strong as Supermicro, which makes water-cooled rack systems, but their sales are supposed to be up 32.3%. That's excellent. Their earnings are supposed to be up 31.6%, and again, very strong. The analyst community has revised their estimates higher in the past 90 days significantly, and it has a very good surprise history in the last couple of quarters, and in the previous quarter, it beat by 4.6%. So I am expecting Dell to beat and provide positive guidance. Everybody involved in data centers is just beating expectations. So why shouldn't Dell beat as well?
Does Snowflake show enterprise spending strength?
Snowflake's sales are supposed to be up 27.2%. Their earnings are supposed to decline 9.4%. And the analysts have cut their estimates in the last 90 days. So that's unfortunate. Their margins are clearly under compression. Now, with that said, they got a good earnings surprise history. Last quarter was 12.5%. Every quarter's beaten. So in the last 4 quarters, let's hope they surprise us. But it's off my radar now because obviously I want absolute earnings growth, and it's forecast to be negative, but maybe they'll prove the analysts wrong.
Now for Stellantis, is it telling us about global auto demand?
Well, not really, because they're just a mess. That's all I can tell you. They didn't build enough EVs. The EU wants to impose fines if they don't build enough EVs, but they can't compete with the Chinese EVs in Europe. They've diverted more production back to America. Obviously, they're Ram trucks, Jeep, under President Trump. Now they're building these big Hellcat engines, which under Biden they were getting rid of. So here's the deal. Their sales, believe it or not, are supposed to be up 10.7%. Their earnings, you have no idea of. Absolutely no idea. So I think this company's a mess. I think this company has to be reorged. Obviously, what's hurting this company is the European Union is systematically destroying many of their brands, especially Alfa Romeo and Fiat. Now, they have French brands as well that seem to be doing better and can build EVs a little bit more acceptable. But if I was running Stellantis, I would just pick up all their brands, build them in America, and get out from under the European Union, because the European Union's demands are crushing this company.
How is Warner Brothers doing before they decide who to merge with?
They don't look too good. Sales are supposed to be down 7%. Earnings are supposed to be down a whopping 92%. The earnings look minuscule. Last quarter, they had a 16.4% miss. And before that, they had a big surprise, but they have missed 3 of the last 4 quarters. So they need to team up. So the question, are they going to team up with Netflix, or are they going to team up with Paramount? Both those companies are wooing them. Netflix was there first. If Warner Brothers Discovery decides to team up with Paramount, apparently Netflix gets a big payment. But they got to merge with somebody to improve their streaming services, because right now they're floundering.
Now for J.M. Smucker, what do you expect for them?
Well, we've talked about this company before. They make the Uncrustables and all kinds of interesting products. Now, their sales are supposed to be up 6.3%, which is excellent, but their earnings are supposed to decline 13.4%. And unfortunately, analysts have been trimming their estimates in the last 90 days. And guess what? They've missed the last 2 quarters. So we're just waiting for it to turn around. So hopefully they're improving their operating margins, which are under compression, and they can finally post a surprise and some positive guidance. But until they do that, this stock is dead in the water.
And lastly, what do you expect for Berkshire Hathaway?
Well, of course, this is Warren Buffett's company, and Warren Buffett's retiring, and they've sold a lot of interesting businesses. They sold BYD, the biggest electric car company in the world. They are predominantly a reinsurance company now. And reinsurance companies have to typically pay when there's a hurricane or a tornado or earthquake. We had a pretty mild hurricane season last year, so that's been helping their bottom line. Obviously, knock on wood, we haven't had a major earthquake out west yet that's caused damage. And tornadoes are, of course, more isolated. They do have to pay in floods and things like that. That's a little bit more common claims. But as a predominantly a reinsurance company, they are going to profit as interest rates decline. And we did have a significant decline in bond yields so far this month in the wake of that positive CPI report. So that might really help their bottom line. But with that said, a lot of people like Warren Buffett. A lot of people like to invest with him, and this is how you can invest with Warren. I would add that they have had nice surprises the past 2 quarters, but Warren Buffett has not been as chipper as he used to be. And of course, he is retiring.
Well, that's all we have for you this Sunday. Thank you all so much for watching and joining us. As always, make sure to give this video a like and subscribe if you haven't already, but we'll see you this Wednesday for a midweek update.